Yo, what is good, guys? Welcome to another video. And essentially, what this video is going to be about, it's pretty much going to be different. Because if you're expecting this video to be about the concepts and like for me to be really spilling out sauce and give you guys good, valuable information, I'm sorry, but this won't be it. It will be if you're just getting started, but if you already have experience into trading, close this video right now. If you already have experience, you shouldn't even be here in the first place. You should be back testing because if you already know exactly what to do, it's not a video that's gonna fix you. It is a it is back testing, gathering your data, and having a proper journal. All right. But if you're a complete beginner, all right, if you're starting out, then hey, you made it to the right place. This is exactly where you want to be if you're starting out. All right. Why? Because today we're going to be talking about terminology. Yes, the terms when it comes to trading. Most, we're going to be talking about like uh the basic ones, all right? Just pretty much what order states and what is risk to reward and just like open, high, low, and closes of candles, wicks, and just simple things, all right? It won't be nothing that like if you've been trading for a year, bro, get out of here, you know? But if you haven't, stay here because this is gonna be valuable information that's gonna go a long way if you plan to trade how I trade. But even if you don't, I'll be honest, it's good information to know. But this is general information, so at the end of the day, it doesn't really matter my strategy or not. But without further ado, let's get started. So, what do we have here, guys? What do we have here? Pretty much this is for the long terminology. So what does long mean? For example, a person says, "Oh, I'm getting into longs on gold." It pretty much means that they are buying, okay? They're getting they're a position that is bought now with the intent to sell later at a higher price. So they're buying here, expecting to sell at a higher price. Exactly it. So they're getting into a long position, okay? That's just like quick terminology. I'm buying in, I'm getting into longs, simple, right? And we also have shorts. Okay? Okay? We also have shorts. So, what is shorts? It's pretty much when you bet that price is gonna start going down and you get into a position. So when you say I'm getting into a short, it pretty much means that you're selling the market and you're getting in a position that is sold now with the intent to buy later at a lower price. Get it? So for example, you bought here at 30 points and then you sold it at 40, boom, you made 10 points profit. You get it? And here you sold, let's say price was at $40 and then you opened a short position as it goes down and let's say it gets to $30, you made 10 points on that, and then it all depends. For example, let's say you have 100 shares, uh, and then you made $10 profit per share, so that's 100 times 10, which is 1,000. I was about to say 10,000. Like, nah. Funny. But bro, guys, I know how to trade and I don't know math. You feel me? Like, what the fuck? Like today, I was in like funny shit. I was in a position today, and it was like the easiest thing, you know. It was like 11 divided by 2. And I was like, yo, bro, what's 11 divided by 2? Because low key, I'm focused on this trade right now. I'm gonna manage my position and just like I can't even do the math right now. I know charts, bro. Put me behind a chart and I'll be able to read it. But now have me to do math for anything, hell nah. Either way, we already talked about everything here. We talked about sells and we talked about buys, longs and shorts. All right. Now let's talk about risk to reward. That is interesting. All right. A lot of people don't know what risk to reward is. Okay. So pretty much let's talk about risk. Risk is just how much you're willing to lose on a trade. Okay. So let's say uh your risk is 2 points, for example, so you're getting at $30 and your stop loss is at $28. So your risk is $2. That's how much you're willing to lose for the trade to be invalid. All right, and the reward is simply how much you're going to make. So risk versus reward ratio or reward versus risk ratio, it doesn't matter. Uh, it's just, the ratio between the difference between your entry price and your target price. Get it? So for example, let's say you get in at $30. Okay? And your your stop loss is at 28, and then you sell at 40. Okay, your stop your stop loss was 2 points. So then you made 10 points, you feel me? And then your RR is 5 to 1 because you divide your reward by your risk. Get it? Y'all got that? Low key, that shit was confusing as fuck. But pretty much it's double the size, okay? So for example, this right here, it's this target is 5 times larger than how much you were willing to lose. That's it. It's the difference between how much you're willing to lose and how much you actually made. You know, that's what risk reward is. And risk rewards are good in a trade because you can be a profitable trader with just 3 wins and 7 losers. Why? Let's say you have a risk to reward, people say RR, of 3 to 1 minimum per trade. Okay? So every time you win 3 times the amount, okay, that you lose. When you lose, you just lose 1. Okay? Because this is 1 risk and this is reward. Okay? 3 reward and 1 risk. So let's say you were to take 7 losses. Okay? 7 times 1, 1, 2, 3, 4, 5, 6, 7. So we lost 7R. Usually 1R is 1%, okay guys? So what is an R? R is like 1% of my account. So for me to blow up and completely lose my account, I need to lose 100 trades in a row, which honestly guys, that is very fucking hard. Like you're not gonna lose 100 trades in a row unless like you're doing something wrong, you're not following this strategy. That is very hard, okay? To lose 100 trades in a row. Unless like you actually like went on tilt and like didn't do profitable trader things, you know? If you're doing profitable trader things, it's damn near impossible. Because the randomness of the chart is gonna make you win at least 1 or 2 trades. You know? But either way, getting back to the track here, 1R is AR is equal to 1% of your account. So here we took 7R loss. Okay, we took 7 losses here, so we're down 7% of our account. But then with these 3 winners, remember our risk to reward is 3 times minimum. So with 3 winners, the first one, one, two, three. The second one, one, two, three, and then the third one, one, two, three. So within only 3 wins, guys, you guys are at 9% gain. Get it? So 9 minus 7, everybody knows math, 2, you know? So, with a negative win rate and high risk to reward, you can be profitable still and you can make money into trading. And that's what a lot of people like they don't acknowledge, you know. They always try to they think that win rate matters a lot, but I'd say it's a formula between your risk to reward and your win rate, you know. For example, my win rate is around 50 to 60%. I'd say like 50, it's in its 50%, you know, 60%. Uh, but my risk to reward is also like 2 to 1, 3 to 1, you know. There's trades that it will hit only 2 to 1, and there's trades that it will hit 4 to 1. So it really depends on like how the trade performs. But my minimum RR now I'm doing differently. Like now I'm just shooting towards opposing zones, and I'm not being as engineered as I used to be. So I'm more focused on the charge than anything else, than like anything mechanically. So, but usually, uh, they're like 2 to 1. My TP1 and my TP2 is at 4 to 1, which that brings my average trade to like 3% gain whenever it hits both TPs. You know, so this is very important. Now, imagine with a 50% win rate though. Because with a 30% win rate, uh you're still up 2% every 10 trades. Imagine with a 50% win rate, you know? It's crazy. It's crazy the numbers you get. Especially when the trade runs and you're actually like getting a lot of risk to reward in it. For example, the trades I took today, one of them ran 10 to 1 RR, guys. You know what that is? That is 10% in a day in a single trade. Crazy. Well, all right. Let's go over. We already went over risk reward. So now let's go over candles. All right. Candlesticks. This is very nice here. Candlesticks. Okay. So let's talk about the green candles. Green candles pretty much price going up and then red candles going down. But ironically, in my charts here, look at this. My up candles are red and my down candles are black. I just found that to be so tough. So I decided to do it, you know. Boom, right here. All right. So what is here on the green candle? This right here, this line right here, that's the open. All right. This right here. Right, literally right here. This is when price first opened. I'll show you guys on the charts right after we go through this. I'll show you guys the candle. That's why I'm teaching on TradingView because after I'll go straight to the charts. Uh, but this is where price opened. Okay, and then oh my God, let me just check. Okay, I'm recording, bro. I thought I wasn't recording. But either way, this is where price opened. All right, and that's just when price opened of the candle. Whenever a new time frame candle prints, it opens. Okay, then it went up all the way to here. Okay, and then price came down and it closed right here. Okay, close is the less price which an order was filled. Okay, the less price that an order was filled within the time frame of the candle. So the last order was a buy at 69, the candle is gonna close at 69. You get it? And then open is the first order pretty much whenever that time frame opens. The high is the highest order whenever the highest price or the highest order that was filled whenever that time frame was traded. And then the low is the lowest order that was filled when this candle was being formed, you know. And same thing vice versa. So let's say it's a 5 minute chart and 10 a.m. just hits. Boom, it just opened. The first order at 5 a.m. is gonna print as this open. Whether it's 10, 20, it doesn't matter. You know, it's just gonna print here, boom, open. Usually the spread, there's something called spread, which we're gonna talk about later on. But it's just the difference between your orders. You know, for example, the spread. There's penny stocks that aren't that are not liquid as much, you know, and because they're not as liquid, they have a higher spread. For example, a buyer can be willing to buy at like $10 and a seller can be willing to sell at like $20. So when a buyer decides to buy at like $20, price will shoot up, you know, and people are going to be like, what the fuck, what the fuck? But it's just the e-liquid stock. And I know that because I've traded them before. I've traded penny stocks, traded options, you know, so I've seen that happen in real time. Hold up, let me drink some water. So it's just the higher and open is just the first candle close and like I don't want you guys to think that there's gonna be a huge spread because there's not gonna be this huge spread. And what the spread is just the the spread is the distance between the price that a buyer is willing to buy and a seller is willing to sell. All right, because there will be times that this distance will be massive and price will fluctuate a lot, and then there's times it will be very tight. For example, on ES, it's very tight, so price is not gonna jump as much. That's pretty much what I'm trying to say. Get it? So, price opened right here, and then it closed right here, and then this was the lowest order that was filled, and then this was the highest. Okay, and all supply and demand is us. Supply and demand is a strategy that I trade. All it is finding areas of orders in the chart that price is going to return to, fill these orders, and go from there, you know. But we're going to talk more about that. But, okay, you guys see here, open, low, high, close. What are these called right here? Well, they're the wicks. These are the bodies right here, and then this black thing here, this black like stick is called the wick. Wick, wick. You know, they're called the wicks, top wick, top wick, bottom wick. And then these are the bodies right here. Body. This is the body. And then this is the open of the body, the close of the body, the low wick and the high wick, top wick, you know. And then we look at our candlesticks, all right? We look at our ranges, all right? Just because ignore bearish and very bearish, all right? Just think about it as is this candle bearish, neutral, or bullish, all right? And I wouldn't say do 40-60, do like 33, no. Yeah, 40-60, I guess. I don't do the 40-60 because For me, guys, it's different. I already have so many years of experience that, like, when I look at a candle, I can tell it is a basing in a zone. Even though for you guys are so like, ah, it needs to look like a zone. It needs to look like I see here. You know, like, no, guys, trading is not perfect. So stop trying to find the perfect answer because I used to be like that and that only cooked me, you know? And here we have a nice quiz of answer me what are these candles based off of the range, right? So I want you guys to just look at this and then like now it's when you are gonna have to put in some work. Look at this and then look at this. I'll make sure I put the answers in the description of the video so you guys can see, you know. But this is just like a quick quiz for you guys to like lock in, you know. Let me see if I have another picture. No, I don't have. All right, that's chill. That is chill. Okay. Then we're just gonna talk more about the other stuff. I'm looking here at one more, but to be honest, this is it. This is the whole video here. That's everything I wanted to teach you guys. And now let's just go here to the charts so I can show you guys the examples in real time. Okay? Not every candle is gonna have a wick. Okay? As you guys can see, this one doesn't have a wick. It opened and then it went up. That means price never went down from the moment we opened up. Okay? We opened up and price just went up from there. Okay? But look, this is open. This is where we closed, and then this is that top wick right there with the high of the candle, right? Right there. Okay? And then that's where we closed. All right? Now let's go to this previous one. Boom, right here. Okay, this is where price opened, okay, and then it went up all the way to there, and it also went all the way to there. Okay, these are the bottom wick, top wick, this is the low, and then this is the high of the candle, and then it closed right there. Okay, this is a down candle right here. So look, price was going up, and then this candle opened up right here. Okay, it shot up all the way there. Okay, so it was a bullish candle at some point. At some point, buyers were thinking, oh, we're all in control here, and then it flipped all the way down. And then boom, look, it got all the way to here, and then it closed right here. Okay, pretty much that is it. Not much else to talk about. This video was more about terminology and just open high lows and closes. You know, not much else. Very basic terminology for trading there, and but it is, to be honest, just what you need. Oh, and risk to reward, of course, of course. Let me show you guys a risk to reward example right here of the trade I took today, for by the way. So let's go to the ES 5 minute. I'll show you guys the first trade because I took two trades today. Uh, so I'll show you guys the first one. Because on the second one there is a sauce to it. There is some, there's a little bit of something special on the second trade that I don't want to share with you guys. And this drop base rally will be much easier to just say, hey, look at this on it. Then like I don't want to share like much details, because come on, guys, I worked for this, and like if you want it bad enough, you're gonna figure it out too. I promise you, it's not that hard. Either way, I took two trades today. This one only hit TP1, and then the other one, it was actually the one that it ran a lot. But as price was coming back into here, this was my zone. Drop base rally, you know. You can see it better on like the 10 minute, I think. There was a good time frame to it that it looked 30 minute. Drop base rally, okay. Price came and retested it, and then I had my TP1 back on this the 15 minute. You can see it better. Look, rally base drop. Let me go to the 10 minute. 10 minute doesn't look as clean. 5 minute, yeah, look, rally base drop, and then TP1 was basically right here. So I got into the trade, and then boom, TP was it. Uh, what was I talking about? I wanted to make a point. I know I wanted to make a point, but I forgot. Oh, risk to reward. Yes, correct. So look, so look. 3.13 to 1. I pretty much use this tool here on TradingView, which I think it is right here. Look, forecasting. It's 1, 2, 3, 4, 5. It's the fifth one down. You click on this little arrow, and then boom, forecasting. Okay, and then I click on long position. All right. But look, the size of my the size of my zone, the size of my zone. Oop, let me go to. I don't think the 20 minute is gonna look clean. Yeah, no. So yeah, we're gonna have to deal with it on the 30, cause the 30 just looks ugly because we ended up stopping the zone out, but it is what it is. So look, guys, what is the risk reward right here? Boom. Oop, wrong one. Damn. Let me do the measure too. So look, my stop size was 7.5 ticks. 7 points and like two ticks here. You know, a tick is a 25-cent increment. So there's two right here. You feel me? Every 25 cents, it's a tick. Uh, so 7.50. You know, whatever the fuck. My TP was like 25.75. You know, so let's do 7.50 divided by, no, my bad. 25.75 divided by 7.5, 3.43 to 1. So my take profit was 3.43 times larger than my stop loss. What does that mean? If I were to buy right here and I said, okay, my risk on this trade, I'm willing to lose $100. If price were to get to here, I'd lose $100. But since it got three times larger than what I was betting that $100 to be, I actually made $300. Get it? Just that's just what risk to reward is. But this was just a very informational video, not anything advanced, okay? I'm still gonna make videos on zones like this. This is just day one. So I hope you guys liked it and have a great night and ciao.